The U.S. dollar index is heading for its 8th straight week of strengthening. It's the longest such run since 2014. And here with how the expensive dollar weighs on stocks, Yahoo Finance's Jared Blikre joining us from the NYSE. Jared, talk us through it.
Thank you, Julie. Let's go to the Wi-Fi Interactive because a chart is worth 1,000 words in this instance. Here is the Dixie, the DXY. This is a max chart. I'm going to dial this down to a year-to-date. You're going to see down here the U.S. dollar index bottomed in early July. And as you said, Julie, it is on an 8-week run here. Pretty big move on this chart right here, but take a look at what's happening on a 1-year chart, much less a 5-year chart. You're going to see this move virtually disappear on the right-hand side of your screen, and that's because it's really that small compared to historic moves. Now, the big move was in 2022. That was last year when the Federal Reserve was rapidly raising rates, and there was enhanced demand for the U.S. bonds at elevated yields, and that has to do with that dynamic. So interest rate differentials will drive currencies, as will haven flows. We also had a number of scary events last year, the Russia invasion of Ukraine, and that was a geopolitical event. That automatically sees a flight into dollars. Now let me show you on our dollar heat map versus all the other currencies. This is a year-to-date look, and you can see we have ARS, that's the Argentine peso. US dollar is up 98%. That means the ARS has lost half of its value over the last however many months we have in this year. Then we had the Turkish lira, 43%, the ruble, the South African rand, and it goes on. But then we hit the Japanese yen, and this is a little bit of a scarier picture here. The Japanese yen has weakened to unsustainable levels. Here you can see the US dollar is up 12.5% year to date. Julie, you were commenting on this earlier today. The folks over at the Bank of Japan may have their backs against the wall. So if I'm looking for potential disruptions in currency land, which could leak over into stocks and bonds, that's where I would look front and center. But let's stick with the US dollar here. I'm going to show our China exposed US stocks. This is year to date. Let me show you the last 2 months because that is when the US dollar has had its big run up here. You can see some negative returns here for Apple, for Texas Instruments, for Nike, which derives a lot of its revenue from China. Why China? It's just kind of an interesting cross-section of an emerging market, something that's a market that's very sensitive to the US dollar, and where a lot of US multinationals have a lot of investment and where they derive a lot of their revenue. So the higher dollar, generally not good for US multinationals, but also any company that derives their price from a lower commodity prices. So that even affects small caps at the long end of the range. So going forward, US dollar, if it were to race higher, probably an impediment, but if we're just zigzagging around it within current ranges, probably not the obstacle that some would make it seem.
All right, Yahoo Finance's own Jared Blikre there on the floor of the New York Stock Exchange. Thanks so much for that update, Jared. Appreciate it.